Hey, what's up, guys? Let's see, Wednesday afternoon. We finished up a trading session earlier, the guys and I, the Smoove trading group. And I wanted to create this video. There's a couple of videos that I want to create based on some things I've seen in the market today. But this one in particular is about this sort of V-shaped pattern that I've been seeing. It's a support bounce play that I've been seeing on stocks that have strength, that have shown strength throughout the day, and stocks that are trying to break previous resistance levels. So I'm going to show you guys this. I'm going to show you my screen, and this is AEZS. This is how it's been performing during the day. You can see it's been a strong stock in the small cap market, but particularly I want to look at it from how it performed this morning. So essentially um, before about 12 o'clock, 12 p.m. And what we saw was that this was a stock that popped up, had a nice U shape right here, and then broke out of that U shaped pattern to surge from $1.65 all the way up to $2.04, about $2.07. So that was a nice play. You could have gotten a nice gain there, about 40 to 50 cents in profit if you timed that well. Or even 10 cents, with the right amount of shares. That's more than enough to make a really good profit. We were watching this to see if it would break to 10. That's what we wanted to see. We wanted to see it break this area. $2, the whole dollar area has been a little risky for us recently in this market that's trying to rebound. We've seen stocks break the $2, $3 mark, $1 mark, and then get up and get stuck around the 110, 210, 310 area. We're not sure why, but that's just what we've seen. And then later on they break through. But during the morning we've seen some resistance at those whole dollar areas after a stock has already made its big move up. So on this stock we see one touch right here, the original touch, two touches right here at that level of 204, and so we were expecting this to break right here at the third touch or somewhere close. As you can see right there, you see higher. Hold on one second. You see higher lows forming right here. So we thought that on this third touch that it would surely have a nice breakthrough and we'd see that breakout. But however, we didn't. Instead we saw a nice drop. And part of being a trader is being adaptable in the market, any market. So being able to play long plays and buy long if that's your strategy. But if the market isn't showing those good opportunities to be able to, buy support plays, plays that are bouncing off of moving averages or support as your backup. And if those things aren't working, then yeah, you should learn how to short. There's different strategies. There's basically you can adapt to any market as a trader. So this stock didn't break that level that we wanted to see, not even on the third touch. And so what I noticed here, though, was we have the 13-day moving average up here. That's that blue line. And then we have the 50-day moving average right here. That's the green line. And we have the 200-day moving average down here. That's this red line. What I've noticed is that when stocks seem to have a big move up and they're showing strength, meaning that it didn't pop up and just immediately drop back down after its move. It actually held that level for quite some time. We just wanted to see it break through a bit higher, but it's showing strength because it's holding this level. It's not fading off. So there's a chance that it could break it again. Then what we saw was 1, 2, 3, 4 consecutive red candles. I've noticed that when I see 4 consecutive red candles plus a breakdown past the 13-day EMA, the next level of support, if it ever gets to the moving average, that's a good place for support. And so what I do is I draw a trend line right here. And if it breaks out of this trend line, then that's a good signal to buy. So somewhere around here, as soon as it touched the moving average, would have been a good place to get in. And then to hold it for a quick 10-cent gain as it went up to $1.92 or so would have been a nice quick 10-cent profit or so. Actually, it went up to 196. So what we notice is that it drops, hits the moving average, and then it has room to move all the way up to, a couple cents below where it previously had resistance. So in this case, it had resistance around 198. So, 196, 197, around that area. This is a great support play that we'll be looking to play in the future. It's a quick pop. We seen it yesterday. This is a chart from yesterday. This is TRVG. So as you guys can see right here, there's 1, 2, 3, 4, 5, 6, 7 consecutive red candles. Same exact thing. It breaks the 13-day exponential moving average, comes down to the 50-day moving average. So we drew a trend line right along the edge of the red candles where it was dropping. And our idea is that if it breaks this trend, if it breaks outside of it, then it's going to try and rebound and make a nice support bounce up. Since it dropped down to the 50-day moving average, we believe that it can come back to at least test where it was before it began that decline. So it was at $6.94, dropped all the way down to $6.81. In this chart, it did exactly the same thing as the other one. It found support right on the 50-day moving average and then popped right back up steadily to $6.96, close to the same exact place. There was no resistance in this area. There's only resistance there at that $6.96 area right before $7. So it had room to move up. So I don't know what to call this. It obviously looks like a V-shaped pattern. It continues to happen, and it's pretty predictable. You can see it in real time when it's happening. It's not a fast move, so you can see it happening and call it out. But this is one that we'll continue to watch as well. It's a pretty reliable one, it seems. So it's called the V pattern. All right, guys.